Up from the ground came a bubbling crude oil, that is. Black gold, Texas tea. Next thing you know, old Jed's a millionaire. So that's what we're trying to do here with oil. Wanted to take a look with you as to my crystal ball prediction that maybe, indeed, maybe just maybe, oil has reached a local bottom and it's going to go back green. Let's take a look at the chart. This is on barchart.com, and we're looking at USO, which is a US oil fund. Currently, you see here that today oil is downtown to Chinatown 4.61%. So took it on the chin in my portfolio because I've got a lot of oil going on in my portfolio. But let's look at since, what's the date at the top there? The end of September. So if we're at the end of September, and if you went back further here, you would be able to count 5 waves up. And we've talked about the Elliott wave theory and Fibonacci retracements in previous videos. And basically, it is what I like most about the theory is it's based on emotions. It's based on sentiment. It's based on human emotions and biology. And when you look at most anything and everything, it is based on biology. So it's no coincidence that we are at our most fertile, both men and women, in our 20s, and we happen to be at our best physical attractiveness during those years as well. So yes, 2 and 2 does make 4. The same with, if you look around and you realize that so many people are overweight, it is biology. It is nothing else because we evolved when we had to scavenge for food, where we had to hunt down woolly mammoths and fight them to the death just to eat. Now we have food readily available. So what do? We eat it. We eat as much of it as we can. So that is biology. Same with emotion and market sentiment, whether we know it or not, or like it or not. I think it's true. You may think it's voodoo, but let's find out. That's why I like to record these videos before some of these predictions are on the board. So here is one of them. So if we look at the high here at the end of September, we can count 1 wave down, green wave up. That's number 2. 3 wave down, which should be the longest, typically as long or longer than all of the trends down. 4 up and 5 down. Now, I could possibly be making up this 4 and 5, which would then essentially turn the end of this 5 into just the bottom of that 3, because it can do ups and downs either in 1, 2, 3, 4, 5s or ABCs on its way through its total trend, its wave up or wave down. So this could just be the end of 3, or it's potentially the end of 5. Either way, the next move should be up. So if this was 3, where this 5 is, then the next move would be up on the 4 side. If it is 5 down and we've now reached a local bottom, then we should either be seeing an ABC up or a 1, 2, 3, 4, 5 up. So that is what we'll be looking at over the course of the next several days. In fact, as soon as tomorrow. And that, again, that is just my honest and accurate opinion. So I wanted to get it on the board here, 4:05 p.m., Farm Fields of Valparaiso, Indiana. And then let's look, and you'll see my conviction in this theory, in this Elliott wave theory, based on what I did today. So if we roll and scroll to take a look at what went on today, we did roll a call in Hyatt Hotels, 115, one contract, moved it out to December 15th for $208. We talked about Jackson Financial yesterday, and I was hoping maybe I could get like $980 rolling that $40 call out. And we ended up rolling those 6 contracts out to March 15th and collected $1,020. Now, what could easily happen in the meantime is that those shares are called away prior to, let's see, if we go here, let's see here. If we go to Jackson Financial, we see that I think it's the end of November. Is it the 28th, 29th, or 30th? that the next X dividend date is for Jackson Financial. It is the 29th. So whatever it is, we're trying to create a little, I don't know what you would call it. Is it a diabolical plot? Is it a diabolical plan to possibly create another round of dividends for our pocketbook? If not, if they're called away, then we have indeed put that $1,020? Where is your spreadsheet? Oh, we're in the individual. Confusing yourself because, as usual, you have too many tabs open. So $1,020 went into our pocket, and they cannot remove it at this point. So even if they take our shares away and rip them out of our hands at $40, anytime between now and the next X dividend date, we're just fine with it because this money we did not have prior. If we sneak through and collect another round of dividends, even better. Now, I did sell 5 put contracts on the USO at $66, expiring next Friday. Collected $280 for doing so. Yep, you see it correctly there. Went more in on Chevron, bought 300 shares at $141.25 a share for $42,373. ExxonMobil bought 300 more shares of Exxon for $102.23, $30,667. Valero, I rolled that call to 126 to December 1st, collected $243. And then UCO, which is a double levered, 2 times leveraged ETF for oil, and I sold 5 $27 put contracts for one day. They expire tomorrow, collected $155 there. So as you could say, I'm either crazy as can be, or I have some serious conviction. So we'll see what plays out. I feel pretty strongly that we are at or very, very near the bottom of the local bottom for our friends at the big oil. If this is indeed still a 3 here, then we're going to see a bounce at the 4. But that next move, I think, should put us between $72 and $73 on USO, which would be about 6 to 7% movement. So if you looked at, let's find out where did our friends at, let's just say ExxonMobil, where did ExxonMobil close today? It closed at 102.48. Okay, I have an average cost on my 1,000 shares. I have an average cost of 103.99. Closed today at 102.48. So if we look at the abacus and we went on the short side of that 6%, so 102.48 times 1.06, that 0.6 represents the 6%, and that would bring us up to $108.62. I think that could definitely happen between now and next Friday, which would clear out a number of my oil positions at some nice profit. So that is what I'm looking at to go on, starting as soon as tomorrow. I've got my fingers crossed that it starts as soon as tomorrow, especially regarding that the UCO, those 5 put contracts that are only one day out. As far as the rest, we'll get into those tomorrow because I'm flip-flopping again on Palantir. I may just let those go and then wait for another downturn to sell puts into them. Because when I ran the numbers again today, and it was like going out 2 months, it was only 15% annualized return. And Palantir, as you know, is fairly volatile. So 15% might not be enough. I will run through this just real quick. This is another energy company, PBF Energy, $50 puts, way underwater. Okay. Currently trading at 44.35. So they are down 4.15% today. PBF Energy. Okay. So I've got $50 puts. I'm prepared to pay $5,000 worth of 44.35 puts. But if I rolled it and said, I'm not prepared to take ownership yet, it is a monthly, so it'd be out 29 days. I don't want to pay any type of debit, so $550 is what I need to cover, right? So $550 I need to cover, so I would have to go up to the $50 mark. That puts us at $45 for 29 days. Okay. $45 divided by $5,000 divided by 29 days multiplied by 365. That's 11.3% annualized. Now, if I take those shares, all right, now this is a big red day for oil. So when the day turns red, which will be tomorrow, right, Bart? Please tell me so. Yes, it'll be tomorrow. When it turns green, okay, and it's tomorrow or Monday or Tuesday, and we take those shares tomorrow at 50, regardless. I don't think PBF is going through 50 tomorrow. So I'm planning on taking on those shares. And what it would do is this: if we look at the 47.56 that I have on the board now, 47.56 times the 500 shares I have, right? That's 23,780, and then I would be paying 5,000 more dollars for an additional 100 shares. So I'd be in it $28,780, and I would have 600 shares. So divided by 600, that brings my cost basis only up to 47.97. So not a big jump on the average cost, and these trade in $5 increments in the options chain. So it's not going to change what my call price would be, and it would only add 41 cents per share to what I need to cover. So at $50, I'll be making a profit, a pretty good profit. So if we looked at trading PBF Energy options, but this time we looked at selling that call that we're willing to accept for $5,000, which is $50 per share, 100 contracts. We went out to 30 days. What is the premium on the $50? It is 35. Okay, 35 cents, okay, divided by the 50, and then we'll be even a day shorter. So divided by 28 days multiplied by 365. Now we're looking at oh, Nelly. Why did this math work out earlier when I put it on the board? It's probably because oil wasn't down as low. So not a great live example. However, we will look at that. I did run it earlier, and when this starts to go green, this number is going to change and be higher than the 50. So make sure you plan ahead instead of just clicking the button and starting a recording. But I promise you it'll be worth it in the long run just for me to take those shares at 50 and then sell covered calls on those. And it is a monthly, so we'll be looking to do that. I'll show you all of the math on PBF Energy. Once I take those 500 shares on, we'll get it into our individual spreadsheet and go from there because, yep, oil's going up. It is. It is going up. You don't know that, do you? I really don't, but I just really think it is. So we will find out, won't we? Thanks for tuning in. I will see you tomorrow. Make sure you do subscribe, like, comment, and keep your fingers crossed for me and big oil. See you in the next video.